Good morning, investors. You are now on KleverStock with me, Anujaria, serving you the latest morning bell updates. Kicking it off with the opening bell updates on our local market. The FPM KLCI rose on Thursday, supported by another positive close on Wall Street that fueled further bargain hunting on the local market. The benchmark index opened 2.66 points higher at 1,627.16 as corporate Malaysia entered the penultimate day of its quarterly results season. TA Securities said the market's recovery was likely to continue, driven by investors seeking bargains after recent share price weakness, though upside may be capped without new domestic catalyst. The research house said that immediate resistance is capped at the December 2024 high of 1,644, with the highs of 1,684 and 1,695 as tougher upside hurdles. Immediate support is set at the 61.8% FR 1,564, with stronger supports at the 50% FR at 1,527 and 38.2% FR at 1,490. Rakuten Trade noted that sustained trading interest suggested a gradual return of investor confidence. Analysts stated that strength in sectors tied to consumer spending, services, and industrial activity reinforces the view that domestic fundamentals are improving. For today, we project the FPM KLCI to move within the 1,620 to 1,635 range today. Among counters posting gains following their recent results were Time.com up 42 cents to 5 ringgit and 19 cent, IHH Healthcare rising 10 cents to 8 ringgit and 17 cent, and M-Bank adding 9 cents to 5 ringgit and 97 cent. In active trading, M-Touch rose 1 cent to 6.5 cents, Genetech slipped 2 cents to 30 cents, while AHB eased 1 cent to 2.5 cents. Moving on to local currency updates. The ringgit opened higher against US dollar on Thursday as the greenback continued to track the weaker US dollar index, which stayed below the 100-point level. At 8 a.m., the ringgit strengthened to 4.1255 or 4.1395 versus the US dollar, compared with 4.1360 or 4.1385 at Wednesday's close. Bank Muamalat Malaysia Berhad Chief Economist Dr. Muhammad Afzal Nizam Abdul Rashid said the expectations of a December US federal funds rate cut were keeping pressure on the greenback. He said that growing expectations of a US rate cut in December were weighing on the US dollar, adding that discussions around the next US Federal Reserve Chair in 2026 also appeared to bolster the rate cut narrative. He noted that the ringgit was expected to oscillate around 4 ringgit and 12 cents to 4 ringgit and 13 cents. At the opening, the ringgit traded mixed against major currencies. It firmed against the Japanese yen to 2.6405 or 2.6496, but weakened against the British pound to 5.4638 or 5.4824, and edged lower against the euro to 4.7864 or 4.8026. The local note traded higher against ASEAN currencies. It rose against Singapore dollar to 3.1823 or 3.1933, strengthened against the Thai baht to 12.8022 or 12.8556, appreciated against the Indonesian rupiah to 247.5 or 248.5, and was higher against the Philippine peso at 7.01 or 7.03. Now for some local economic news. Malaysia's trade performance for the January-September 2025 period rose 4.4% to 2.235 trillion ringgit, marking the highest level ever recorded despite challenging global conditions. Investment, Trade and Industry Minister Tengku Datuk Seri Zakhrul Abdul Aziz said Malaysia's strong 134% trade to GDP ratio, among the highest globally, reflected the country's deep integration with international markets and reinforced the need to remain competitive, resilient and inclusive. The minister stated that trade has always been the heartbeat of the Malaysian economy. Our focus remains on strengthening diversification, fully leveraging free trade agreements, accelerating export digitalization, expanding high-value industries, and reinforcing our industrial ecosystem. The Khuzafrul said that Malaysia had maintained resilience amid geopolitical headwinds, including the Russia-Ukraine conflict, US-China tensions, and escalating tariff actions by the United States. In 2024, total trade reached a record of 2.879 trillion ringgit, generating a surplus of 136.88 billion ringgit. The country's 27th consecutive year of trade surplus since 1998. For the first 9 months of 2025, exports increased 4.8% to 1.170 trillion ringgit, while imports rose 4% to 1.064 trillion ringgit, resulting in a 105.65 billion ringgit surplus. He said growth was led by electrical and electronics E&E products, especially semiconductors, as well as machinery and equipment, palm oil and related products, and processed food. The Khuzafrul added that the sharp rise in E&E exports was partly due to front-loading activities early this year to mitigate the effects of US tariff measures alongside a strengthening global tech upcycle. Malaysia also posted higher exports to key markets including the United States, Taiwan, ASEAN, the European Union, and Hong Kong. Trade expanded moderately by 6.1% to 749.04 billion ringgit in the second quarter of 2025 as global policy uncertainty weighed on performance. Exports grew 3.3% to 381.67 billion ringgit, while imports surged 9% to 367.37 billion ringgit, narrowing the surplus by 55.9% year-on-year. Malaysia's trade momentum strengthened in the third quarter, rising 3.7% to 769.81 billion ringgit, with exports up 6.7% to 410.06 billion ringgit, and imports inching up 0.4% to 359.75 billion ringgit. The trade surplus nearly doubled to 50.31 billion ringgit, supported by strong demand for E&E, machinery, equipment, and scientific products. The Khuzafrul said investment activity also remained robust. For the first half of 2025, approved investments increased 18.7% to 190.3 billion ringgit, covering 3,011 projects across manufacturing, services, and primary sectors. These investments are expected to create 89,294 jobs. Still on national news, the World Bank Group WBG, via its private sector arm, the International Finance Corp IFC, has signed an agreement with Permodalan Darul Ta'zim PDT and Detroit Energy Holdings Sinjam Berhad to jointly develop one of the world's largest renewable energy RE corridors in Johor, a 25 billion ringgit investment aimed at powering the state's industrial and digital expansion. The Southern Johor Renewable Energy Corridor (SJREC), covering 2,000 square kilometers, will comprise large-scale hybrid solar facilities and battery energy storage systems. Once completed, it is expected to supply clean electricity to major energy users, including hyperscale data center operators, manufacturers, and multinational corporations operating in Johor. In a joint statement, the parties said the corridor will also enable the export of renewable energy to Singapore, supporting the ASEAN Power Grid Initiative and aligning with the Johor-Singapore Special Economic Zone Master Plan. Witnessed by Her Majesty Raja Zarid Sofia, Queen of Malaysia, the agreement underscores high-level support for Johor's clean energy ambitions and cross-border energy cooperation. PDT President and Group Chief Executive Datuk Ramli A. Rahman said the project will play a transformative role in Johor's economic development. Datuk Ramli said that the SJREC is expected to generate significant economic benefits for the state, including the creation of an estimated 125,000 jobs across construction, operations, and maintenance. This will enable industrial expansions and attract high-quality foreign direct investment. The initial phase of the project will include up to 4 GWP of solar capacity with 5.12 GWH of energy storage to be developed on a 4,047 hectare per site. IFC, the largest global development institution focused on the private sector in emerging markets, said that the partnership demonstrates the scale of investment required to accelerate the energy transition in Southeast Asia. Electrolic Energy, one of the region's leading integrated renewable energy companies, will bring technical and project execution expertise to the development. The SJREC aims to position Johor as a major renewable energy hub in Asia, supporting both domestic demand and regional power connectivity. Moving on to corporate news updates. Analysts turn more cautious on Oriental Coffee Holdings Berhad as stretched valuations and recent share price volatility overshadow the cafe operator's steady consumer-driven outlook. While resilient domestic spending and increased mall footfall continue to support business fundamentals, research houses noted that the stock's upside potential appears capped for now. APAC Securities downgraded the stock to a hold from buy, though it maintained the target price TP at RM1.26, following fourth quarter results for the period ended September 30th that were broadly in line with expectations. The company also declared an interim single-tier dividend of 1 cent per share for the financial year 2025. APAC said it expects Oriental Coffee's cafe business to remain the key earnings driver in the financial year 2026, supported by resilient domestic consumption and rising household spending across urban and suburban areas. The research firm added that tourism momentum is also strengthening, with international arrivals projected to reach 35.6 million ringgit by 2026 under the Visit Malaysia 2026 campaign, which should lift footfall in malls where Oriental Coffee's cafes are typically located. Meanwhile, MBSB Research maintained a sell rating with a TP of RM1.03, citing stretched valuations following the stock's recent rally. It noted that the counter now trades at 31.35 times price to earnings, above multiples of larger regional peers. The research house added that the company's packaged food portfolio, including seasonal items such as mooncakes as well as early-stage overseas distribution efforts, provide incremental growth opportunities. Hong Leong Investment Bank HLIB research stayed constructive on the group's medium-term prospects, raising its financial year 2026 and financial year 2027 earnings forecast by 8% and 6% respectively, to reflect stronger than expected revenue trajectory from new outlets and improving customer throughput. While maintaining a hold call, HLIB revised its TP to RM1.22 from RM1.13. It said the recent share price has stretched valuations, resulting in a more balanced risk-reward at current levels. Now, despite differing recommendations, analysts agree that Oriental Coffee's fundamentals remain intact, driven by consumer resilience, outlet expansions, and product diversification, though near-term valuations may limit share price upside. And finally, wrapping up, we have major corporate developments and deals across Malaysia. Kerjaya Prospect Group Berhad's wholly owned subsidiary has accepted a RM350.6 million contract for building works in Batu Kawan, Penang from related party Pixel Valley Berhad. Sunview Group Berhad has partnered New Energy Holdings Berhad to strengthen its presence in the presidential solar market via a share subscription agreement. Hibiscus Petroleum Berhad aims to expand its oil and gas business in New Zealand while remaining focused on the Southeast Asian market. Chin Hin Group Property Berhad is acquiring 2 contiguous parcels of leasehold land in Taman Puncak Jalil, Selangor for RM91 million. Alliance Malaysia Berhad has appointed Julio Slavic as CEO of Alliance Life Insurance Malaysia Berhad effective January 1st, 2026, succeeding Charles Ong, who retires on December 31st, 2025. And finally, YTL Corp Berhad Executive Chairman Tan Sri Francis Yeo was named ASEAN Personality of the Year 2025 Lifetime Achievement Award at the 26th Asian Business Award 2025 in London. Now that's a wrap for Moneyball Updates with me, Anujarya, on KleverStock. Thank you for choosing us, investors. Stay tuned for the next live Coming soon.